This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Thursday morning. I'm Prashant. With me, my colleagues Sonia and Surbi is joining us here on the program today. Guys, hi, good morning. And first up, let me wish both of you a very happy Janmashtami. Yeah. Wish all our viewers a very happy Janmashtami as well.
I think it was pouring today, right, in Mumbai. Very poetic on Janmashtami. There's like a full downpour. But, I mean, even for the markets, I think it's pouring bullish trends. Although this morning there are some sort of headwinds. But give and take all the headwinds, this market has been moving from strength to strength, which is not bad at all.
Oh, as you said, we have some headwinds today. But I think Prashant and my colors, nice, cheerful shades of lilac and pink, or maybe making up for that, Prashant.
I mean, let's hope so.
Festive colors, yeah.
But, let's just quickly run you through what you need to know, as we always do, before we go any further. Markets building on gains, and I think it was evident yesterday as well. Yesterday, it was interesting because we started lower. The market continued to drift down till about 1:30 p.m., middle afternoon. From 1:30 to about 3 o'clock, it did nothing. It drifted slightly higher, and starting 3 p.m., the 3 p.m. move came, and that bulk of that 35-point move came in the last 30 minutes of trade. So, which basically meant that Nifty is now closed above the 50% retracement of the fall. What fall am I talking about? I'm talking about the fall from the highs of the July 20th highs to the 31st of August lows, the full fall. So, 50% retracement of this fall is 19,607. We've closed marginally above that level at 19,611, so marginally above. Okay, let's just tackle the overnight cues, which once again are not great. So I'll start with data, and then I'll get to the price action from the US. So ISM services data for the month of August in the US was a surprise. I mean, it surprisingly, in a very strong fashion, rebounded. That number stands at 54.5 compared to 52.7, which is the previous number. And by the way, services inflation is much harder to kill as compared to goods inflation. And that is the reason why markets took notice. By the way, if you look at components, prices paid, employment, new orders, all rose. The two-year yield in the US that went up, traded above the 5% mark. It's a psychological resistance. The 10-year also moved up about 3 or 4 basis points. Equity slumped. You had the S&P, which was down about 0.7. The Nasdaq was down over 1% or so. Add to this is, of course, the big pain point for us, which so far we've completely and cleanly and nicely ignored, which is oil prices, right? We are now closer to $91 a barrel. It's a little baffling. Usually, these OPEC production curtailment and cuts, etc., the reaction does not last for very long. And I don't think it should last for very long this time around as well. But we'll see. In any case, we are now at uncomfortable levels of about $91 a barrel. Let's get to the market here in terms of levels and tie all of that in. So the next major hurdle is basically we've crossed 50%. So one will look for that 50% to be held. But beyond this, the next major hurdle stands at 19,700, which is the 61.8% retracement of the July high to the August low. A close above 19,700, I mean, there's nothing then there except the all-time high of 19,991. On the way down, the 20-day moving average of 19,423 should act as a support. Lower the low, the risk-reward to try and buy the dip becomes easier. But I would still say what I said yesterday morning. If you have to do something, reduce the size a little bit. Because, I mean, global macros, etc., are not really complementing or helping you. They're not a tailwind. At the margin, they're a headwind. So positioning and the size of the position becomes important. On the Nifty Bank, we are still consolidating around the 40-day exponential moving average. It needs to close above the 44,660 level, which is the first resistance on the upside. On the way up, the Bank Nifty target is 45,312, a number we put out for a week now, which is the same retracement, 61.8% retracement of the Bank Nifty fall, which stands at 45,312. These numbers are not very far away, 3-4%, and you're there. On the way down, use yesterday's lows of 44,207 as a bit of a support, and closer to it, perhaps a little more comfort as compared to try and chase the open or chase an up move, etc. That's the kind of market we're in. The GIFT Nifty implied open will come up on your screen. And I think we are down about 34 odd points or so. Mid caps and small caps also took a bit of a break yesterday. They were sideways. I mean, they were down between 1/4 and 0.5% at one point, but they closed absolutely flat. Sonia.
Absolutely. Prashant, I think the overall trend is still bullish, although in the very near term, there are some bearish cues sort of, providing a a roadblock to the market, right, in the very near term. So that's what we're going to talk about. The Nifty has conquered that 19,600 mark very well. In fact, the Nifty is now, less than 2% away from that all-time high, the 52-week high, that is, of 19,990. So we're not too far away from new highs. And if you look at individual pockets, right, it's IT versus banks. So IT, the Nifty IT index is now at a fresh 52-week high. In fact, stocks like HCL Tech are now up almost 20% this year. So that's where all the money has been going. While the bank Nifty, if you look at it, is up just about 3% this year, while the IT index is up almost about 12%. So it's really advantage IT and banks yet again on the back foot. So that's the way the market has been positioned so far. The Dow is down 200 points overnight, so the global cues are not that great this morning. And both foreign and domestic investors sold in the cash markets yesterday. So that as well is a bit of a bearish cue. FI sold in large quantities, about 3,200 crores. DI sold as well. In fact, there was large selling from FI seen in the mid-cap space. And we were talking about this. It's better to be cautious in the mid-cap arena because there is some froth in the mid-cap end of trade. Yesterday, there were large funds that sold in many mid-caps and hence this big FI number. We've talked about this ad nauseum as to how Brent at $91 a barrel is a headwind for the market. The dollar index at a 6-month high is a headwind for, risky assets like equities. Dollar index now at almost 105. So, yes, on the sidelines, there are definitely a lot of cues that could perhaps derail the market. But up until now, that has not happened. So clearly a bullish trend.
Well, Sonia, while I take your point that, overall the mood is still positive, but I think this rise in yields that Prashant also alluded to, that's something you can't ignore because we thought we were over and done with that after the last Fed policy. But the way Fed members have been speaking, yesterday there was another member saying that hikes are still on the table if inflation remains sticky. You tie that in with the oil narrative and we know that perhaps this is not entirely done. It's not a done deal as yet. I think in September, the CME Fed Watch tool is still saying that there'll be a pause. But in the next policy, in the November policy, there's about a 45-50% chance of a rate hike. And that's been the chatter on Wall Street all throughout this week. So those two cues that both Prashant and Sonia spoke about, the dollar index and oil, they're a big headwind, and the fact that the US 10-year is still close to the 4.3% mark. Let's add China into the mix. In a bit from now, we'll get Chinese data. Let's pull up the Hang Seng, which is a little subdued. It's down about 0.5%. Why will China become a talking point today? Because the EXIM data, export-import data, is going to be coming out. Last time, remember that number was a big howler. Exports and imports were down 14%, 12% apiece. That pace of decline in August is supposed to lower to about 9%, should reduce to about 9%. Let's see if that happens or not. So China becomes an important talking point because the excitement that we had on Monday, start of the week, about all the measures and the cut in deposit rates in China, that's beginning to wear off. We saw that yesterday, even this morning. Chinese markets are not doing too much, down about 0.5%. So China will become another talking point. And to talk about the market here, what's happened is that there is definitely a defensive shift, a defensive tilt that's very evident in prices all through this week. In fact, through this month of September, what's working in the market? It's actually IT and pharma. Those are the sectors that have been outperforming this week and this month. And banks continue to be a laggard. That's another worry point for the market. So far this week, the bank Nifty is actually flat, underperforming the other indices. Look at the healthcare index, pharma, IT. That's where the money has been shifting. So the good thing for the bulls is that IT has been doing some of that heavy lifting, making up for the decline in bank stocks. That's a watch point for me today, whether this trend can remain intact and counter the negativity that we have been getting in from banks. The bias is still in mid-caps and small-caps, and that market's still flying away. We're up about 3 to 3.5% on the mid-cap and small-cap indices for the month of September, the last 6-7 trading sessions. Comparatively speaking, Nifty is obviously up just about 2%. Just watch for the FII selling. Sonia, you were talking about yesterday's number. If you go back and look at the data all throughout the month, we're largely negative. We're getting these big 4-digit sell figures, and that's because of the block trades. While you kind of, take that caveat in point, there's no taking away from the fact that the overall number, actually I should have put up the overall number for August, that's come down remarkably. We were getting 45,000, 46, 47,000 crores of FPI buying every single month. August, whether you're talking about April, May, June. In August, that number has dwindled to 12,200 crores. So while, yes, we do talk about all the block trade action, the net result is that the total amount of inflow that's coming in has reduced, and that's showing up in a very range-bound market.
Absolutely. And I think as we head into a couple of these big events, right, the US Fed meet on the 19th and 20th of September. Of course, in the run-up to the elections, there's so much chatter around that as well. And a lot of these commodities have been surging. So in that context, there are definitely a lot of headwinds that this market has to navigate.
You missed the Apple refresh, right? They're doing a model refresh on the 12th of September.
That's the big one to watch. So the Apple 15, the iPhone 15 is being launched. Right?
Do you guys still stay up and watch those events? I remember there used to be a rage back in the day. I'm not so sure now.
Just read about them
in the morning.
The next morning. Well, let's just quickly tell you what's lined up here in the first half hour of the show. Then we'll get you updates from markets across the globe. Cameron Brander, VPFR, will discuss flows with us. Our research team will bring you CNBC TV18's list of top 10 stocks for the day. At about 8:30 in the morning, we'll get you Deepan Mehta, Velexer Equities, with a quick check on things, stocks, and sectors that he's looking at favorably.
All right, let's begin the day with some views coming in, shall we? On the equities front, we have Mahesh Nandurkar of Jefferies. He says India's capex upcycle is visible across housing and infrastructure and also in corporate capex. He says overall capacity utilization is near 10-year highs, with examples being cement and power. He says large capex uptick seen in steel and chemicals also. He adds private project loan approvals also show an uptick, and with further upside likely from the PLI, data center, etc., the capex cycle appears durable. Mahesh says multiples on related stock plays to remain elevated due to a dearth of ideas, and their preferred capex plays are Axis Bank, ICICI Bank, SBI, L&T, Ultratech, JSW Energy, Thermax, KEI, Siemens, Supreme Industries, and Kajaria. He adds Macrotech and Godrej Properties are their top property picks.
Okay, well, money market views now. This is Dhaval Dalal of Edelweiss, who says bond yields are expected to trade range-bound with an upward bias in the near term and subdued sentiment. He says rising prices of pulses and crude oil, if sustained, may have the potential to destabilize the inflation outlook. He adds hardening of U.S. Treasury yields have also affected the mood. He expects the 10-year benchmark bond yield to trade between 7.2 to 7.25%.
Okay, we have plenty of stocks that we'll be talking about today as well, and our list of top 10 stocks will come up in a bit. Today we'll be looking at names like TCS, Shriram Finance, Ringfolk Services, JM Financial, NRB Bearing, Biocon Biologics, Paytm and ONGC, all on the back of positive news flow. PG Electroplast and Tata Consumer are the stocks that could be reacting on the red side. We'll tell you why in just a bit.